Oh, okay. Wonderful, wonderful, wonderful. How are we doing today? Um, trust you guys are doing well. Welcome, welcome to the very first episode of um, our um, weekly opportunity hunt here at Suavally Markets. I'm very excited to be doing this because I think that one of the ways in which we can sort of keep ourselves accountable and also help us as a community to grow and become better is to begin with such initiatives as this. It doesn't just have to be a weekly thing. As a matter of fact, I'd much rather prefer that we get to a point where we can actually do this daily. That's every morning, for instance. But we're just getting started with this, and it's I just want you guys to just make a commitment to ensuring that you join up with this at least um every single weekend. So what is the goal? What is the goal? Why are we doing this? Why are we doing this? First, of course, we want to be able to identify opportunities in the market ahead of the new week, but more importantly, we want to build the discipline to be able to plan appropriately, to be able to get the right sort of work ethic that's required to succeed. Success in trading is not so different from success in any other field. The more you plan, the better your chances are at actually succeeding. So these sessions are going to be very short. Uh, I don't want them to exceed 30 minutes. So going to try as much as possible to cramping ideas and thoughts about what's happening in the market ahead of the new week. So you guys, I hope you've been following trends and things that are happening in the market. Um, one of the places that I like to start an analysis from, one of the places that I like to start analysis from is to look at the USD, and primarily because the USD is so influential in the markets in sort of like the general market. Um, so I usually like to begin from the um, USD index, which um, gives you a sense, which basically gives you a sense. So it's like a weighted average of the USD against a basket of currencies, largely the major pairs. So um, I'm just gonna, and that's actually where I'm going to begin from. Last week, on my on the email that I sent out, the weekly market analysis, I mentioned that uh, one of the key fundamentals, one of the key things that is currently driving the market now in the US, one of the key themes is whether or not the US Fed chair is going to be tapering, which basically means it's going to be slowing down on asset purchases. Now, even whether you're a technical trader or a fundamental trader, it always makes some sense for you to understand what the market sentiment around the current environment is. So for the US right now, for like since COVID started, there's been massive purchase of assets, basically of US bonds and the likes. I'm going to include a note within our community later on how you can sort of educate yourself about that. And what this means is that the entire market, from like several weeks back, are basically been watching out to find out, hey, what's the Fed going to do? Will they reduce, taper down, basically reduce their purchase or their stimulus, their sort of monetary stimulus, which basically is buying back bonds. There's a whole lot of how this works, but basically quantitative easing, buying back bonds and trying to artificially stimulate money in the economy. And if they cut down on this, what this means is that the market usually would interpret this positively for the currency. So USD is so influential in um, global the global currencies market. So it makes a lot of sense for us to really check out what's happening, understand what the fundamentals of what's happening with the USD is, and before we basically get started with looking at other things. So I'm just gonna get started now. I'm gonna look for the USD. I'm gonna look for the USD index. If you guys can see my screen, you can indicate in the chat box below. There's a chat box below, so you can indicate in there. Okay, we're looking for USD index. So you can easily search for this. You can search for the USD index live chart. You're gonna find a number of places. You can get started with TradingView. TradingView is a great place to. I'll be doing most of the analysis on the MT4 because I'm a little old school. So, but yeah. So okay. So let's see. All right. So again, the reason why I recommend that you begin from an analysis on the USD index is because it's so very it counts a lot for the behavior of the market. A large percentage, even pairs that do not have the USD on either the base on the counter side, usually are affected by the dynamics of the USD. So understanding sort of like what the general bias is like is usually very helpful. So looking at the USD index right now, you can see that if we were to you'd see that if you were to go historically, you'd see that you had a pattern of falling highs and falling lows, which, by the way, should be the first thing you're looking out for. The pattern of rising highs and rising lows form the most fundamental and probably the most useful sort of indication of the direction of a particular or of the existing trend in the market. It's in the absence this of clarity on this that you should begin to look at other sort of kinds of price action, so sort of types of price action or indicators or whatever. But if what you're looking out for is to get a sense of what the trend is, the pattern of highs and lows, simple as it is, forms the basics of the understanding. So historically here, you'd see that you have sort of a pattern of um, falling highs and falling lows up until not so long ago, where we actually started seeing uh, that the USD started sort of it started kind of rising, But as you can see here, you, from around this point, okay, from around this point, which is sometime around sort of um, May end, getting into June, we started seeing like a pattern of rising uh, resistance and support highs and lows. And last week was very bullish across majority of the pairs for the USD. You see, this is the GPB USD. You could see like if this represents last week, you could see some sort of very long um, candlestick, sort of series of candlesticks here. This, for instance, from the beginning of the week to the end of it was over 200 pips, and it was just basically straight down. We did talk about this. If you guys follow my weekly market analysis, I did talk about this. I did publish this last week in this analysis where I was talking about the potential for for yeah, right. So where I spoke about, yeah, what was happening, and I remember I said this sets up a lot of attention to Fed chair, blah blah blah, which basically was talking about the main thing, the main theme of the market being that hey, everyone is watching out what the Fed is going to do. There's a lot of fundamental bias along the lines of a positive US dollar, because fundamentally because there's a notion that the US economy is at the point where it likely is sufficient for them to begin to remove this huge stupendous amount of monies that they are spending on buying back bonds. And that's the thing. And when you look at when you now go and look at what the price action is actually doing, you now begin to see it playing out as well. Okay, so you're seeing the rising parts of rising lows, but you can see here on the USD index, it's actually getting to a point that's kind of like a resistance. And what happens around this point, whether this becomes a resistance that's truly broken out, in which case it likely would head towards the next main resistance, which of course would mean that there's likely going to be strength for the USD across majors, which means the GPP, excuse me, for GPP USD, we could see like a further breakdown into lower levels. Okay, and when you look at this kind of supported by the pattern, the technical analysis pattern on the daily. So normally for a linear trend, you'd expect rising highs and rising lows. But when you begin to have that, you cannot see subsequently that highs are rising, but instead you are seeing that those highs are falling. That's a very strong indication that that prior trend is starting to abate. Now we have sort of like a layer of moving, a very simple setup here, a layer of moving averages. Okay, price has broken through the 50th, the 100 moving average, even through the 200-day moving average, which of course says a lot about the likely shift in bias. So when you add these technicals with a sense of the fundamental, it begins to give you a sense that hey, this is likely what's going to happen. Okay, now we're looking at what's likely going to happen within the week. So usually these sort of period separators tell us what they give a sense of each week, and I usually like to use them for sort of like a visual sense of what likely might happen in the new week. So imagine if you had another period separator, say somewhere around here. This now begins to give you a sense of what is likely going to happen. What kinds of moves can you see into the new week? Now, if we were to plot out, if this continues to play out like this with with a new sort of pattern of falling resistances and falling support, for us to see that happen, we would have to see a breakout of this particular level here. It becomes noteworthy for you to consider the 23.6 level, okay, because it's the closest to current price action. When you take this chart from the swing low here to the swing high, looking at possible levels of correction. Now we can see that if price is still currently around the 23.6 level, there's still a lot more farther that it can go. It can get to the 38.2 level, and we have supports around there. It can get to the 58 level, and of course can even get to the 61.8 level. So there's a lot of downward potential. But one key thing to note about trends is that trends don't move linearly, so they move in impulse corrective moves. So if you even though the trend might be on the down, we had an entire week of USD strength last week. Can we potentially see some correction? That's also likely. That might have nothing to do with the technical scenario. It might actually have just something to do with market sentiment. just perception of overbought and oversold levels from the shorter time frame building up into the higher time frames, which might make for maybe in the near term, sort of like in the beginnings of the week, you might actually see a push up of price. But what levels I am taking cognizance of is I'm going to be taking cognizance of this resistance level here. Okay. This resistance level here and maybe even here, because if we're looking for a correction, we're going to be looking at 37.10 for price not to cross below, even if you are not to cross above, even if we're looking for a correction. All right, to give us confidence that okay, you know what, we're still in a bearish market environment. But if we get a clean break below 35.94, okay, if we get a clean break below 35.94, then we could possibly be looking at lower levels here. So I did a short note on what those levels could be, and another thing for the GPBs, another thing that you need to know for the GPBs. So there's a lot of concern around the rising cases of the Delta variant of COVID, and the UK's ability to manage these rising cases. This is another fundamental sort of thing that you kind of bear in mind. I guess some folks are going to be wanting to know, hey, David, why are you talking about the fundamentals? Why is this important? I think it's important for you to have a sense of what is happening in and around the currencies that you choose to trade. Okay. All right. So we now begin to watch carefully these levels. So these levels we're watching for 34.77. If price crosses below this 23.6 level of the Fibonacci 35, that's around 35.94. We could see it descend to 34.77. We could see it further descend even further, and this sort of gives you a sense of what could be happening on that asset. Now moving on to Euro USD. What's happening with this guy? Let me check, guys, if you guys are following. If you have any questions, or if you guys want to contribute, so just give me a moment. Let me check that out. Okay. All right. If you guys want to contribute or say anything, you guys are welcome to do that. All right. You guys are welcome to do that. Now, okay, so back to what we're looking at now. For Euro USD, we actually, if you take the swing low to the single, you're almost at 38.2 level, which kind of tells you that there's a bit more resilience to the USD strength. Okay, a little bit more resilience to the USD strength as opposed the GPBUS. But in any case, what is fundamentally important is that when you look tomorrow, okay, at the very beginning of the week, we're going to be having around 8:30, just around the start of the London session, we're going to be having some fundamental releases. One of them is the PMI, the Purchasing Managers Index. There's a sentiment around that. You can check and confirm that from Forex Factory. I think I got that noted somewhere. Here, yeah, okay. So we have for the German flash manufacturing PMI. So what this basically, it's a strong indicator of the sentiment of both the manufacturers, and there are about 800 of them, if I remember correctly. They take a census of about 800 of them, try to ask them, what do you think about the economy? What do you think about what's going on in the economy? So there's an indices for it. Let me check to see if we can get Forex Factory on that one. Yeah. So this is basically what I'm talking about, and this is happening around 8:30 a.m. Now, so these two, you have the German flash manufacturing PMI and the German flash services PMI. Basically, it's kind of like a census where about 800 people are asked, hey, what do you think about the economy? So ideally, the benchmark, anything above 50, you can see it here. Above 50 indicates industry expansion, blah blah blah. But the interesting thing about this is that there's a sense that there should be some level of industry expansion as month on month COVID eases. Okay, so we have uh, an expectation of 65.1 and another expectation of 61.1 for the services. So for the manufacturing, 65.1; for the services, 61.0. Now, what does this mean? This basically means that you're going to get some volatility around euro pairs. Now, you're going to get some volatility, and this can set the tone in a sense. The whatever comes out of here can set this tone for how traders begin to perceive uh, the health of the eurozone. Of course, Germany is so important, the most important, in fact, country in the eurozone. Um, so, which can also set the tone for what we're likely going to see in the week. So, for intraday traders, you should take note of that. Do not be unaware that this such a thing exists in the market. Now, again, here we can see that USD strength was also dominant here. This is uh, uh, this is what last week meant. We saw price come all the way from here, which is about 1793, all the way down to 16. So quite a move, quite a move, about 100 and something pips thereabout. Then before some level of correction. What are we looking at in terms of what the key levels are? In terms of what the key levels are, again, not so different from what we had for the euro and for the pounds dollar. Um, USD strength is going to play a strong factor in here, and questions around tapering of assets on and on like that will play a very strong part in terms of how everyone sort of views this and how this particular asset class, Euro USD, this particular asset behaves. So if we see a clean break below this level, okay, we might possibly advance towards lower levels. So I've taken the liberty to plot out potential retracement levels here, and we can see here that you can see various levels here. We can see near term, okay, we can see near term 1650 57, and when you go lower we can see 1600, which is also that's a psychological level. Round figures are usually psychological levels, and that's almost 93 pips away from here, all the way down to 1500. So we watch for what happens in the market break. But if at the start of the week again, normal impulse correction moves, we could see a drive up of price towards sort of higher levels here, and we will be also watching these two levels, especially 1799, which is about 1800 there. About let's just say 1800. We'll be watching 1800. Um, if price crosses gets above 1748, or let's just say 1750, we will be watching very closely, because that just might change the near-term structure of price. This is the 4 hours now. It might change the near-term structure of price, and anything that makes price break above 1800, we'll begin to watch for a move to higher levels, 1900 thereabout. But this is um, on the longer term showing a double top, and usually in a double top, um, you can see price reenacting the move of one of the neckline to the top. It's one of the more common, more traditional price action chart pattern analysis. Now, this is very clearly a double top with a neckline here. So a break below here confirms that based on that price action analysis towards lower levels. All right, guys. So right, we're fast running out of time right now, but let me see if we can take another major. Okay, another major, this time around USD Jpy. USD Jpy. Now, our moving averages all point upwards, all of them, all our moving averages point upward, which kind of gives us a sense of what's happening. But what we are seeing towards the end of the price action here is that resistances and supports are starting to fall, and kind of caged price. And this is the daily chart, by the way. I kind of caged price action into this sort of falling channel. To now, it's still very difficult to decide whether this trend is going to continue. But if you look at this, there are two possibilities. Okay, there are two possibilities in terms of what's going to happen, and how we will determine what happens with each of those possibilities is where price approaches. Now, if we get at the start of the week, okay, price approach this level, 110.14, and is unable to go higher than this level, we just might be seeing a descent of price from that level all the way down, which gives us a very interesting trading opportunity, of course, towards the lower support level. Now, that would mean that this particular pattern here, this sort of descending channel, is set to hold. One thing about price action analysis is you want to ensure that price is sufficiently at one edge of either sufficiently at demand or supply. Now, where relative to the current price here at 109.72 is not sufficiently at demand or supply relative to this sort of happening. So you want to see it here or kind of closer here to give you a sense of sort of what is going on. So I would want to see how price sort of moves, okay? And I'm sure that the USD will set a tone for this particular pair as it would for other majors, very likely in the week to come. A lot of stuff is happening in the week to come. Let me just quickly mention about what you should be expecting from the USD. A lot of fundamentals going on. A very interesting fundamental is going on in the USD, and so largely on Thursday and Friday, these 2 days, you're going to see there's something happening in the US called the Jackson Hole Symposium. Now, this basically is a 2 day symposium where basically Fed, all the different sort of sub chairs of the Fed and key economy faces and whatnot come together and begin to talk about what's happening in the economy. And so it's interesting because everybody wants to know, like I mentioned before, when is the Fed tapering down on quantitative easing, which is asset purchasing? You know, hopefully we're going to have a session that discusses this a little bit more, like what is quantitative easing, what are asset purchases, how do they influence the direction of price, how do they influence sentiment and all of that. But these things are certainly things that a lot of people watch out for, okay, especially a lot of big sort of key institutional investors. So this is going to set the tone for like especially towards the later ends of the week, whether this is sort of hawkish. Hawkish means that whether this means that the key decision makers, Jerome Powell, for instance, the chair of the Fed, and other sort of whether they are hawkish in terms of tapering down assets. What this means is that whether they are more favorable to tapering down assets, to cutting down their bond purchases and other sort of mortgage purchases and whatnot, or whether or not they're not favorable to that in the near term. So you might, as part of your analysis, want to find out a little bit more about those. You can reach out to us later on if you have an interest in that. So, but back to our price action and getting those key levels, because after doing just sort of an analysis on the sentiment, getting that kind of fundamental sense of what's happening in the market, you want to get those key levels, the price levels, the key levels where price could potentially get to. So clearly, you can see here that our price is below the 200 day moving average, but not quite below some of the lower moving averages, which is telling you that the shift is not absolutely confirmed. A further descent of price to lower levels, 109.41, for instance, can confirm this. Okay, and that's why I've reduced. So very key. You see, like And these levels are very key. This sort of levels, this level here, especially very key. Like I mentioned, 110.14, because if price rises above this level, it potentially could even begin to look like a flag. What is a flag? A flag is this when you have this, and flags are continuation patterns. Okay, so um you basically want to check that out. You basically want to check that out. You want to check that out, especially in light of that sort of strong USD fundamental that we're talking about. You want to check that out. So look at these key levels early on in the week: 110.14, 19.41, and get a sense of what's happening there. Let's quickly go to gold right now. Let's take a look at what's happening here in gold. Now, again, what we see here is that we've had such a long sort of drive up of price rising, resistance rising, support. Then we have around here our flag, our sort of our blanket of moving averages. We have four moving averages here. Prices crossed below each and every one of them at different times. 50, 100, 200, like that. Price has crossed below all of them. And we have a price action here that started from around October there, August thereabout up until now, a pattern where the USD basically has been gaining. Okay, which forms this sort of trend, this sort of downside channel. Now, when you go to the shorter time frame on the 4 hours here, it becomes clear that there's a bit of a struggle to find direction here, even though we can see that we've had price rise through several weeks early on in this year, several weeks that basically ended in and around say around June thereabout, where the USD started gaining strength. Remember, when you look at the USD index, okay, remember the earlier USD index, remember we were talking about the USD starting to gain strength in and around the end of May thereabout. Now, one of the interesting things about, there's something called flight to safety. Okay, there's something called flight to safety. I cannot go into the details of that, but just note for a bit of research, risk on, risk off, flight to safety, some of these things, which usually affect the perceptions of traders, okay, which basically cause an anti-correlatory relationship between the USD and gold as an asset. Now, so from this period, we've been seeing, okay, compliant to USD strength, falling resistances as the USD, which is on the counter side, starts to appear like it's gaining momentum. Will this continue? Will this continue? Now that's a big question as we head into the new week. Let's note the key resistance level here. Now, since price has come here and dipped to form a lower resistance from around this point, lower resistance here, and we've had such a such correction, could we possibly be looking at price going to lower levels? Yes, I definitely think so. I think that if price crosses below this level here, it will likely seek to go to a lower level. So we begin to watch 1749, okay, 0.68, 1749.68. This level, you can note that down for for sort of stating the direction of price. But last week was really shield. It was really like shield in terms of volatility for gold. This was the high to low of gold for last week. Not very exciting as compared to our previous weeks, okay? But we can also look at whether price crosses the lowest price that it was last week. Okay, that can also be an earlier on trigger on this level. Okay, so if price crosses this level at 1771, we can see it descend yet further. Okay, let me see if I can get an indices here just before I go. And indices here. If you guys have been following the S&P 500, it's just been one straight up. US equities have been doing amazing. They've just been doing amazing, and it's just been one high to the next. Okay, let me see if I can find that. Uh, okay, I'm already totally out of time right now. I'm totally out of time right now. If there's anybody who would like to continue or share um, um, an analysis, we would like to share an analysis for subsequent time, whether you're watching now or you're basically whether you're watching now or you're basically watching on the replay, just reach out to us via the chat, and let's have a quick talk with you and see if you can give some value to the community. Would really appreciate it, provided that you have a conversation with us and we're comfortable doing this. This is not just supposed to be, it's supposed to be a community share. So you're absolutely welcome to also share thoughts and see how that. One other thing that I usually check, I just don't have the time now, is the commitment of traders report. But I cannot talk about it right now vis-a-vis some of the things that we've done, some of the analysis that we've done. I usually check that ahead of the week to check who's buying what, whether orders are reducing on one side. I have an entire session on that. But these are some of the things that we talk about in the PMI. A lot of what we're talking about right now, and a lot more are some of the things I will talk about on the PMI. Next section of which is starting next month, 21st, 20th of September, and you can find out more information about how you can get. So the PMI is like a full-fledged mentorship program. It lasts for almost 7 weeks, where you basically get a lot. I'm gonna check if yeah. So these are a few of the things that you can get from the PMI. We can't really discuss a lot of those things. Like I mentioned, we will talk about the COT here. Very useful. Talk about confluence. We talk about journaling. Talk about multi-time frame analysis. Talk about the use of the PPO we have it here. We explore a number of strategies throughout this sort of 7 week period. We'll do a lot more of this. Okay, guys. So lastly, like I mentioned, I look at the S&P 500. Like I said, it's just been, if you had taken a position in the S&P 500 at the beginning of this year, you'd be in crazy money right now. You'd be in crazy money, and it does begin to appear period upon period that the S&P 500 is a sure bet for money making. It's almost a cheat in the market. As a matter of fact, it's been like that in recent times. So what we had last week was just compliant to what this is literally the simplest example, let me see, of sort of what it means for a market to trend. Rising resistances, rising supports, rising resistances, true and true, bounce up of moving averages, and this just continues on and on and on and on. All right. Now, all good times might not last forever, but isn't the whole point of trading and making money about riding the good times when they are there? That I believe that is true. So this doesn't require a lot of analysis, but basically, you want to ahead of the new week, you want to be on the side of the trend as usual. Last week market did dip some, but it still continued to behave. Now, when you have a trending market such as this, dips become buying opportunities. Okay, dips become buying opportunities. All right, so but always be aware that no matter how great the trend is, it's still going to move in impulse correction moves, impulse correction moves. It's not going to be linear. So when you're setting your stops, you have a wide enough room to accommodate those correction moves if you're not getting entries. Or of course, best entries are usually around sort of let me get one of those for you. Best entries are usually around dips. Okay, so around points like this. So you'd see that it's also compliant here. You can get best entries around this area. Okay. All right, guys. I hope you guys did get some value from that. That's the much that I think that I might be able to take on today's session. This is the first one. We're just basically piloting this and trying to see how we can give value to the community. And so remember, if you want to be successful, you've got to be serious about your planning. You've got to do your research, and you've got to mark out those levels, and you've got to just basically do the work. There is no money absent of work. Okay. And ultimately, most importantly, you have to do your risk management. Okay. We teach about position sizing, risk management, correlation, and diversification. So while we share about like different assets, doesn't mean when you want to trade, you're basically going to just trade all those assets. Like I mentioned to you, the USD is a key driver of the direction and the behavior of a number of these assets. What you need to ensure is that you have sufficient enough diversification. We teach about that, how to sort of pick the different assets and ensure that you don't have excessive exposure. So this is just analysis. The actual part of trading, okay, which is actually what we do in the full program of the PMI, is something different entirely. All right, that's so much I can take for this evening. On behalf of myself and the team and the guys, you get to know a lot more of the guys within our community as we sort of go on, and as we go on, we say thank you and bye for now.